Hello everyone, I hope you are doing fine. And in this video, we will be discussing about the journal entries in the books of transferor and transferee company. Before, in order to learn that, we shall take the help of the example here. Amalgamation in the nature of merger. Now here some details are given to us. And let's go through those details. First is that company A, which is the transferee, acquires company B, which is what? Transferor. Okay. Then equity shares of company B are 10,000 and the face value per share of company B is rupees 10. Then it is given that the exchange ratio is 1 share for company A for every 2 shares of company B. And the market value per share of company A is rupees 50. This is what it is given in the question. Here, first we need to understand that how can we calculate the assets and the liabilities. Then, for the asset part, let us just understand in order to calculate the assets. We know that assets is equal to liabilities plus capital. Right? The company A, the difference between the face value and market value is 15 minus 10, which is equal to 5 rupees. Okay. Now, assets would be equal to the equity share in here. And the equity share capital for company B is 10,000 multiplied by rupees 10. That is 1 lakh. And liabilities will be 50,000. How? The difference. Because it is said that 1 share for company A for every 2 share of company B. That means the ratio is 1 by 2. That means if the assets is rupees 1 lakh, hence the liability will be half of that, which is 50,000. Then let us just move ahead. First, we have to make the journal entries where in the books of transferor company, that is B. Here, firstly, we need to transfer the assets and liabilities to company A. Then the first thing will be realization account, will be debited to sundry assets account. That means we have the assets of rupees 1 lakh and this will be the entry. And also we will take over the liabilities as well. Sundry liabilities account will be debited to realization account and the amount will be 50,000, which we calculated above. Now all the assets and liabilities have been reallocated and transferred. After that, we will realize the purchase consideration. After that, we will realize the purchase consideration. What is the purchase consideration? For the purchase consideration, we'll talk here. We have the equity share capital of rupees 1 lakh. See, purchase consideration have been received in the shares and the balance have been written off. So the balance which have been written off will be taken from the realization account and the equity share capital of company A. Since the company has to issue one of two and the amount is 15,000, sorry, rupees 15 per share. That means if we look at the question, the company A will have the 5,000 shares. The company A will issue the 5,000 shares. And these 5,000 shares will be costing rupees 75,000. Let me break it down for you. Equity share capital of company A account debit to, sorry, realization account debit to equity share capital account. Okay. Now here, the equity share capital will cost rupees 75,000, which will be 5,000 multiplied by 50. The realization, the remaining amount will be taken from the realization in lieu of the entire amount of the 1 lakh. Okay. After that, the entries are to be done in the books of transferee company. That is A. First of all, we will record first of all we will record the assets and liabilities which are acquired. Okay, that means the sundry assets account debit to sundry liabilities account to business purchase. Now the sundry assets account will cost rupees 1 lakh. Why? Because the assets from company B to company A, which has been transferred, are of rupees how much? 1 lakh. The liabilities are of rupees 50,000, and the remaining will be the business purchase of rupees 50,000. That is the balancing figure. Okay. After that, we will issue the shares to shareholders of company B. Which will be business purchase account debit to equity share account to securities premium account. Now it will be rupees 50,000. It will be rupees 25,000, and it will be rupees 25. And this is how the accounting treatment will be done. Now, let us, so this was the example when we are doing the amalgamation in the nature of the merger. Now, let us just take an example if we are doing the amalgamation in the nature of the purchase. Amalgamation in the nature of purchase. For that, also some details are provided to us. What are those details? That company C, which is the transferee company, acquires company D, which is the transferor company. Equity shares of company D are 20,000. Face value per share of company D is rupees 10. Exchange risk, exchange ratio is 1 share of company C for every 4 shares of company D. Also, the market value per share of company C is rupees 20. And we have also made some cash payments of rupees 1,50,000. And this is pretty much it. Let us just move and talk about the solution here. Now we will make the journal entries in the books of transferor company, that is B. First of all, the realization account. Now, how the assets of rupees 3 lakhs. First of all, we will talk about how the assets and liabilities are calculated. Assets. See, for calculating the assets, first of all, we have the cash payment, which is equal to rupees 1,50,000. Okay. And other than that, we also have the company has the shares costing rupees 2 lakhs. But the company haven't paid all the money for, see, in the question it is written that one share of company C for every 4 shares of company D. That means for every 4 shares, they are going to issue how much amount? They are going to issue around uh, 1 share. That means if we use the calculator in here, just give me a sec. The company C do have the share capital of 20,000 shares. Okay, and they have to only issue for 4 shares, which will be equal to they will issue 5,000 shares, right? And the market value for the company C is how much? It is rupees. Face value is rupees 10. So it will be 5,000 multiplied by 10, which will be equal to 50,000. Okay. So this will also be the cash which we will take. So the net result will be 1,50,000 and the total assets will be rupees 3 lakhs. So for that sake, the journal entry will be as follows. Realization account. The net amount which is to be realized to sundry assets. Is 3 lakhs. Okay. And sundry liabilities account to realization account. Now, after the assets and liabilities have been transferred, we will realize the purchase consideration. When we will realize the purchase consideration, it will be as follows. Equity share capital in company C. Now we need to have a look at the equity share capital at company C. That means it is the 5,000 multiplied by 20, that is rupees 1 lakh. Equity shares in company C account will be debited to, sorry, bank account, which is the cash bank account, debit realization account, debit to equity share capital account. Okay. And here the amount will be INR rupees 1 lakh, which is the equity shares which we have considered above. Then we have the bank account, that is the cash which we have been taking. And the remaining will be the realization account, that is the 50,000, which have to be realized. In the lieu of total rupees 3 lakhs. Okay. And this is how we will realize the purchase consideration. If the entry are to be done in the books of transfer company, that is company D. Now, if we do the entry in the books of transferee company, which is the company C, here the entry will be as follows. First of all, we will record the assets and the liabilities which are acquired. The assets and liabilities acquired. When we talk about the assets and the liabilities acquired, it will be like this. That is, the sundry assets count will be debited to liabilities account to business purchase account. The amount will be, we acquired the total assets of rupees 3 lakhs, out of which the liabilities were of rupees 1 lakh and the business purchase was of rupees 2 lakhs. Then, next up, issue of shares and payment of cash. The next step, we will issue the shares and we will make the payment in cash. For that, the entry will be business purchase account debit to equity share capital account to securities premium account to bank account. That is rupees 2 lakhs, rupees 50,000. Security premium will also be rupees 50,000, and the bank account will be rupees 1 lakh. Now, if you are having the doubt that how the securities premium of 50,000 came, see, let us just go through the question. We have the market value of rupees 20, working note for, let us just talk about this thing because it is a bit confusing. Working note on securities premium. See, face value per share. We had 10 and market value per share had 20. Market premium is equal to rupees 10. How it came is the difference of this. Okay. Now, how many shares, number of shares? They are equal to 5,000. Why? Because they are 20,000 divided by 4. So total premium will be equal to 5,000 multiplied by INR 10, which will be equal to INR 50,000. And that is how the amount of the securities premium have came up. This was right. I hope these two examples were clear to you. Thank you guys. And in the next class, we will discuss about the next examples related to. Thank you so much.